What if I told you Janet Yellen, the Treasury Secretary, believes that the bank crisis isn't over? I'm going to show you the quotes right here and now. We are also going to talk about what's happening with the debt ceiling and the fact that they are at a standoff and why things are likely to get worse before it gets resolved. And then I'm going to show you about some geopolitical tensions that are rising right now. I've got a lot to cover. Let's get into it right away. My name is David Quintieri, and I have been looking into this data for well over a decade, bringing you easily digestible information that's normally so complicated, full of jargon, and you need these videos explaining just that jargon so that you can take in the info. But what I do is I make it real easy, real simple to get the data you need to know. Let's go. Right here, Yellen expects US regulators to be open to mergers among mid-sized banks. Let me give you the quotes right here. This is out of Reuters. I thought it was very interesting to see what she had to say because obviously she knows what's going on and you're not going to get all the details, but certainly we can get a few tidbits. This might be an environment in which we're going to see more mergers, and you know that's something I think regulators will be open to if it occurs. So we can see the consolidation more and more and more in the banking industry. SVB gets bought up and all these other banks get bought up and they take away their assets, they strip them down. All these different things have happened so many times before, and what happens? Well, of course there is less competition, meaning these companies can basically do whatever they want. They can lobby any of the individuals in the government and they can get away with it. Okay, that's the way it works. I mean, I just can't believe it. Shares of the major US regional lenders have been more volatile in recent weeks, with investors wary. Well, you could see that it had fallen 14% so far this month. And as a result of some other information, looking at, Jerome Powell and so on, wasn't too good. Wasn't too good. We'll talk about that in a second here. Yellen noted that pressure on the bank stock could unsettle uninsured depositors. Quote, the unfortunate dynamic is that once the bank stock is under pressure, it can trigger concern among uninsured depositors, even though the bank has adequate capital and liquidity. But let's be honest, we know they don't. Now, this is the case right here and now that we understand what's going to ultimately happen. There's going to be more bailouts, there's going to be more mergers, there's going to be more money printing. And of course, the Federal Reserve is going to be there to backstop any losses. The FDIC cannot actually insure or back up any of these banks. Okay, they're too big. But you're going to be able to just get the taxpayer to pay that bill. Or maybe if it ever got so serious, the Federal Reserve would just print the trillions and quadrillions to make sure that everything's going to be okay. But that's what we're having right now with the bank crisis. She's saying it. Janet Yellen's saying it. And that's something that we should be paying attention to, knowing that they want this to happen. They want these companies to get bigger and bigger, and that would, of course, benefit the few at the top. We know who controls it, we know the shareholders of the Federal Reserve, and we understand the way this works, right? Friends in high places. Friends in high places, okay? So let me look at the next part, which is we've come a long way in policy tightening, and the stance of policy is restrictive, according to Jerome Powell. I tweeted about this, saying basically Ben Bernanke, Jerome Powell, these two are talking. I thought it was funny just to hear them say, but let me just give you the lowdown. All the same things you've heard before. We'll be monitoring to assess the extent of which the additional policy firming may be appropriate to return inflation to 2% over time. In fact, the guy had pieces of paper in his hand and was reading them. He wanted to make sure, word for word, he said the exact same things he does on the statements. Ben Bernanke, Helicopter Ben, he was just sitting there doing his thing. But Jerome Powell was actually reading off these papers like he didn't want to screw this up, okay? But what he said was what he said a million times before. We're going to make sure inflation gets taken care of. The work's not done yet. Higher for longer. However, what they did say, and which is why the market loved it, is basically that, because of the bank crisis, because of the concerns, we have seen financial conditions tighten, and therefore we probably need less of the restrictiveness or increases than we thought we did. all of that points to no rate increases from this point and on. Maybe if things like get real easy right now, then there's going to be one more, but I'm not seeing that. But who knows? I don't have a crystal ball. But ultimately what they're saying, everybody in the Federal Reserve is saying, okay, we're probably at that rate right now. But that means, of course, that they're not just going to go, they don't just get to that point and immediately start dropping. Something has to happen. There has to be an excuse to drop those rates. What is it? You tell me. I don't know. The market's begging and pleading for those rate cuts. Slowing U.S. economy gets closer to recession, according to the leading index. That's called leading economic index. I've shown you this several times before. But essentially just a grouping of different indexes. And of course, there are different indicators that show us a slowdown. There's no question about that. But does that mean that the stock market's not going to go up? Absolutely not. Look how great the market has performed. And now we talk about this big news happening within the whole debt ceiling and so on. This is the latest info. Steep cuts to entitlement program. Oh, by the way, this was essentially insider information suggesting what had happened within the talks that were going on. And this was number 5, the most important in my opinion. Steep cuts to entitlement programs, which make up the bulk of all spending, close to 70%, are off the table. So the only place to go are toward entitlements. There's too much daylight between the sides. Okay, so anyway, what they're saying is they've got to do this. Who knows if they're actually going to do any cuts, but I've said this for a long time, that the entitlement programs, Social Security, Medicare, all these different things, they make up a large bulk of the expenditures, and they're not going to cut the military. We know that, that's a fact. And anything that would benefit, any of these special interests, they can do that. But to the people, they don't care. And maybe they can do this in different ways. They could say, oh, we're going to pay for it in this other way. We're going to increase this, or we're going to tax that and tax you. But ultimately, you know what's going to happen. You're going to get less at the end of the day. This is why I always tell people that you've got to just in your mind, especially if you're younger, a bit younger, in your mind, you have to think there is going to be no retirement account for me. Okay, there's not going to be any government source of income for me. It's going to be zero. Have that in mind. If there is, bonus, great. But have that in mind that they're just not going to do it. They're going to squander it, they're going to spend it, or they're going to give you some crumbs that are left over at the end of the day. Now, what do you think's going on with the geopolitical aspects here? You can look at money being sent to Ukraine. Some people, they're saying that's not a good thing. I don't want to do that because you're telling me that we don't have enough money for entitlement programs, but at the same time, you're going to be sending money to Ukraine. That's what some people are saying. And then we look at what's going on with the BRICS nations and so on. Big developments. Do you want to see that? Let's go. Check it out. Okay. I want to show you something. Iran and Russia discuss joint development of oil and gas fields. This is interesting. 10 of those, and it looks like they're coming in the southern part of Iran. Okay. So that is yet another deal, yet another joint action between these two countries, as well as, check this out, you had Turkey say this. So they're basically the world is putting even more sanctions on Russia. I don't know how there can be any more. They're saying, yeah, with their infrastructure, their supplies, their this and that, everything they need, we're going to sanction. Okay, we're trying to squeeze Russia out. But this is what Turkey said. We are not at a point where we would impose sanctions on Russia like the West have done. We are not bound by the West's sanctions. We are a strong state and we have a positive relationship with Russia. He added that Russia and Turkey need each other in every field possible. I'm pretty sure that means that they're not going to do anything when push comes to shove. So we do see this and what's happening in the two sides that have clearly formed. Turkey's kind of right in the middle of it, and they're trying not to be overly in favor of one or the other, but they've made it very clear right here, right now, that they are saying, well, we're not going to do what you say. And so this is important because you can look at what's going on geopolitically overall. This is very important, not just for the future of the US dollar and so on, but for those tensions that are real heated. Okay, that's something that didn't really, wasn't so bad, let's say 20 years ago, where you would see China and everybody, they just didn't have that. They were just sitting back doing their own thing. Okay, and now today, big difference. What about this? The administration signaled European allies in recent weeks that the US would allow them to export F-16 fighter jets to Ukraine. So first they said no tanks, then they're bringing in the tanks. Then they said no to the F-16s, and now apparently they're not going to block it from happening. And it looks like they're potentially training Ukrainian pilots on this as well. So I'm interested just to see. Hopefully, I'm just hopeful that things just resolve themselves. They shake hands, they say that was the end of that, but who knows? That's it. I mean, a lot of people are on either side and say, one's got to lose, one's got to win. I just hope that things reverse and then a deal can be made and everybody's happy, but I'm not so sure that can occur. Okay, so what I'm trying to show you here is a multifold situation. You've got the bank crisis, you got the debt ceiling crisis, and of course you have the geopolitical tensions that are really off the chart right now. All of these three things, to be honest with you, they don't impact the stock market. But you, the individual, as you can see, your entitlement programs, as they like to call them, your Social Security, your Medicare, the people, let's say in the bottom 50% of income, those are the ones that are going to get squashed by all of this. And you got to realize that. So, these are the things that I believe are important right now today to understand. You got to check out the pillars of prosperity, because that's how we are able to protect ourselves. Pillars of prosperity, the money GPS, or click on this link right here, and I'll see you tomorrow. Take care.